Step 2 is about managing your cash flow, because small businesses fail because of 3 reasons. They fail because of cash flow, they fail because of cash flow, and they fail because of cash flow. You get the point. Now you got to have a cash flow forecast and really understand the facts to understand where you are, because cash flow is about timing. It's different from profits. Cash flow is about the timing of when money flows in versus when money flows out. And I regularly have conversations with business owners who say, I made $1 million in profits last year. Where did the cash go? You can have profits and the money just disappears. You look at the balance sheet to answer where it goes, by the way. Alternatively, you can have cash flow without any profits, which some people are hoping they have right now. I'm going to walk you through the best practices in all managing cash flow from our CEO's Guide to Managing Cash Flow ebook and video series. And the most important one is you need to try and get paid from your customer before you pay payroll. I'll walk you through that process. You also need to have a cash flow forecasting model. And that's the second template that we're giving away today. This is probably the most important tool that you can get from us. It's right now is about having a 13-week forecast to tell you when do you go into the red. This is an Excel template. We hired a Visual Basic programmer to make it easy to get it done and automate some of the process. You simply enter in the start date of when you want to start this process and the cash balance from your general ledger, not from the bank, from the books, and then it'll forecast out for 13 weeks what that cash flow looks like. And what we've done here is we've automated the process to allow you to be able to go into QuickBooks and download your aged accounts receivable report into Excel, and then just suck it up into this model by hitting the import button, and then it shows you the customers and the amounts that each customer owes you in an aging report. And then all you have to do is go in here and enter the week that you expect to collect on each of these balances, weeks 1 through 13. And if you don't expect to receive payment, if you don't expect to get paid from your customer, you just leave it blank. And what that does is it forecasts out week by week, how much do you expect to collect on your receivables based on what you know about them. Then you do the same thing with payables. You download the aged AP into Excel, you import it into this template, it'll automatically show you the balances here without having to rekey all that information, and then you just forecast 1 through 13, what week do you expect to pay on your payables? And it summarizes it here, and then it brings it up onto the summary page where you can see sources of funds. The first line is the forecasted receivable collection week by week, and then it's Excel, so you can just manually go in and enter in any other sources of funds, any other revenue you might earn from work that you're due, or a bank loan or owner's contributions. And then at the bottom, it shows uses of funds, starting with when do you expect to pay on your payables, and then you just go in and enter any other uses of funds that are not included in accounts payable, like rent, payroll, and paying off some debt. What that allows you to do is to be able to look and see, when do you go into the red? And how much do you need to bring in, either in a bank loan or other sources of cash, or to lower some of the payments? That's the most important thing to take away from this workshop, because getting visibility into cash flow problems before they happen, to be able to see them ahead of time, allows you to do something about it and not get surprised, because this is the #1 reason why businesses fail. They run out of cash. The next thing we're recommending to our clients is get liquid. You want to convert anything you can into cash, not only the assets that are not generating revenue, but also look at tapping whatever lines of credit you've got and making sure that you have access to that cash, just in case things go difficult with the banks. And borrowing has never been cheaper and it's easier. So now's a good time to, if you own your own business, to look at whether or not you've got any equity, like in your home, and be able to set up that home equity line of credit. Not that you should use it, but if God forbid this goes for the worst case in a year or more, you're going to be really happy to have that emergency line of credit available to you, that emergency home equity line, I should say, available to you just in case. Because you don't pay for it. There's no cost unless you actually use it. And you want to make sure that you're ready for the worst case in case that becomes reality. Now, the biggest opportunity is obviously the PPP, the Payroll Protection Plan. The funding ran out on phase 3 on Thursday, April 16th. It was $349 billion in forgivable loans, and 1.7 million businesses got it, less than 7% of the 30 million small businesses in America. But now we're just waiting for 370 billion more. There's 310 for the PPP and 60 billion earmarked for small, mid-sized, and community lenders who seem to be the better choice if you've got to choose a banker right now. The same rules apply as the regular PPP. It has to cover payroll, most mortgage interest, and not principal, but interest expense and rent and utility costs for the 8 weeks after the loan is made. Now that money can be used up to $100,000 per person, and not more than 25% of it can be used for non-payroll activities. And you have to maintain your payroll at 75% or more of the costs that you had in Q1, and you have to maintain the headcount in order for this to become a grant and not a loan. If you use it for other than keeping 75% of your payroll costs or 25% of operations, it becomes a loan that you have to pay back. It's 1% interest rate, so it's not bad. And you got 6 months deferment that you don't have to start paying it. And then you've got 2 years to pay that back. But you're going to have to make sure that you certify that you needed the money because of economic uncertainty in order to support your ongoing operations. And you'll have to submit payroll documentation to prove that you kept your payroll at 75%. The details on how this is going to get audited are not clear. So we're really wanting to err on the side of making sure that you are ready for whatever rules they come back with to show how you spent the money. The first recommendation is set up a separate bank account. Put all the funds you get from the PPP into a separate bank account, and then set up a COVID-19 department, or in QuickBooks, a class, so that you can track the expenses of how you use the money. First, you want to make sure that we don't recommend setting up another general ledger account. A lot of people have said to do that because you don't want to mess up your financial reporting and your comparisons to prior years. This is going to end. So we want to look past this and make sure that our financial statements are still meaningful. So by setting up a class, you can still pay for rent just up to 25% and track that to the COVID-19 class. We also suggest setting up a COVID-19 customer or job or service item so that if your employees are tracking their time, or when you're running their payroll, if they don't track time, you can allocate their costs to working on COVID-19 activities. So this will mean that when it comes time for 60 days after June 30th, the banks are going to have to decide how much of this is a loan and how much of this is a grant. And you'll have a financial report to be able to show how you spent the money. Now beware, there are serious penalties for misuse. We've got a link to a video that shows you that you can have up to 5 years in jail and up to $250,000 of penalties if you misuse it, if you use the funds for something other than what they were intended. So that's COVID-19 and the PPP, and now let's get into collections. We've prioritized this based on what we think are the most important things our clients should be focusing on. And like we talked about, you can have cash flow even if you don't have profits. Right now, it's about collections and collecting on the money that you've already worked. And we do outsource bookkeeping, accounting, and controller services for companies who use QuickBooks, NetSuite, or Xero. And what we advise our bookkeepers who are doing the collections calls to be firm, focused, and friendly. Firm means that you do not want to get off a phone call without having gotten a payment date or a commitment to a date of when you can talk again about getting a payment date. Focused is the most important. What that means is, just like your salespeople are trained to overcome the objections in a sales process, your collection staff, whoever's picking up the phone and calling your clients, need to be prepared to overcome the objections that people have when you're trying to separate them from their money. What does that mean? Well, people are going to tell you things like the check is in the mail. And so your staff need to be prepared. Right now, you don't need a physical check to make a deposit anymore. QuickBooks users can use QuickBooks payments and just get the check information. Get the check number, the date, the amount, and the banking information. And you can make a deposit inside QuickBooks through QuickBooks payments. And that's a big opportunity for you to be able to increase liquidity when somebody says that check is on its way. It also, even if you don't make the deposit, if you don't have QuickBooks payments, it also proves that they actually wrote a check. They're not going to be able to lie about a check number. The second objection is, I can pay you some, I can pay you half. Yay, thank you. I appreciate that. Get it in your bank account. Then you want to get a commitment. When can we talk again about the other half that you owe us? And don't end the call until you scheduled that appointment. And then finally, one that we're starting to hear more and more is, I can't pay anyone. Now, what you want to say to those people is, we now accept credit cards. If you worried about, you don't have credit card receipts payments because you didn't want to pay the 3.5%, well, now is the time to take credit cards, unless you have really big invoices, and shift the debt, the risk of collections and foreclosures from your business to MasterCard and Visa. Because the process of setting up Intuit Payment Solutions will automate the entire process. While you're on the phone with that customer, you can send them an email with a Pay Now button. And the customer just clicks on the button and enters in a credit card number, and it automatically processes through Intuit Merchant Services the collections of the fees. And then, because it's all inside QuickBooks, it knows whether that customer paid or not. It can automatically send a reminder email a week later. We have found what that does is it lowers your day sales outstanding from 30 days down to 14 days. Once they get the second email, they're like, oh, I got to make this go away. And it also automates the process of applying the receipt, the cash payment, against the outstanding receivable. So you're eliminating all this bookkeeping cost. You've lowered the cost of billing, collections, and cash application. And so when you want to sharpen the saw, now is about automating as much as you can. Intuit Payment Services is a great way to lower your bookkeeping costs altogether and improve your cash flow. I've got a great blog on why this is so important and how do you do it. The next thing we suggest for the work that you're still doing on the collection side is make sure that you look at your credit policy. Now is a time to be looking and reviewing that credit policy because times have changed. Of course, you want to clearly state when the balance is due. I also suggest that you identify who's paying the bill and when does that person pay the invoice. I'll tell you a story. We are the entire outsourced accounting department for a client called Chief Outsiders. They do Chief Marketing Officer, 62 CMOs across the country. And every time they sign a new contract, the first step in the contract says, you're going to get a call from our accountants at Growth Force. And we pick up the phone and we find out, how do you pay bills? What's the supporting documentation that you need in order to pay that bill? What's the approval process that you need to do on your end so we can make sure that we get that information into the hands of all the people involved in approving the bill before it gets paid. If the bill is due on the 15th of the month, what day do you need to get it in order to pay it on time, and how do you want it? Is email okay? Do you need backup receipts? Is Dropbox preferred? By figuring all that before you start doing any work, you make sure you don't let your clients' cash flow problems become your cash flow problems. It also, what Art Saxby, the CEO, says, it makes you look really professional before you start to do any work. We also recommend that you put late fees in your contracts. Now, we deal with service businesses and nonprofits and professional services organizations like engineers say, I don't want to put late fees to my clients. Well, now you do. Why? Because what you want to do is you want to get your bill to the top of the pile. We recommend 18%, which is 1.5% annually. And what that will do as we talk in payments will help you get paid first. And then finally, in the fine print, make sure you clarify who's going to pay the attorney fees if you have to go to court to get paid, because unfortunately, that's going to happen. So we got a great blog on this. Don't let your clients' cash flow problems become yours. A lot of people just want to get whatever work they can because they have people sitting around, and that's going to get you out of business because you're still going to have to pay those payrolls. And the best way to avoid that cash flow problem is to get paid a deposit before you start doing any work. Typically, we're recommending 50% upfront. Why? Because most of our service business clients and nonprofits have 40% to 60% gross profit margins. And so 50% gets you covering all that payroll costs before you have to pay payroll. That's a key secret here for managing cash flow. It also covers all your materials costs, so you don't have to worry about if they don't pay the other piece, at least you're not out of pocket. Now, what we're seeing right now is I just got this letter from one of our clients who says, we'll be implementing the following temporary credit policy. All customers will be required to make 100% deposit on orders below $5,000. Why would they do that? Because you don't want to waste limited staff time, especially if you have to start firing your controller or other overhead people, and you have to get more done with less. The smaller the bills, the bigger the percentage, the bigger the risks are, and you don't want to be chasing somebody for $1,000 if you can avoid it. So I love this. It also says that we now accept deposits on credit card or check and make it easy to shift the risk to somebody else. Okay, that's collections best practices. Now let's talk about billing. I got to be a Inc. 500 featured speaker for a couple of years, and I did a study of the the Fortune 1000 companies' best practices in cash management. We called every one of them. And what we found was a couple of things that were very interesting. One, timing of when you send out billing will have a material impact on your cash flow. Most people do billing at the end of the month. Why? Because it's easy. Because it gets batch processing for the bookkeeper to gather all the materials, for the project managers to get the information to the bookkeepers, when in fact billing weekly has a significant impact on the timing of your cash flow. And what that does is it also allows you to be able to you should bill as often as you can, as soon as you finish a milestone, as soon as you finish a project. What's interesting is if you bill on a Saturday or a Sunday, you'll get paid 10 days faster than if you invoice on a Tuesday, Thursday, or Friday. Why? Because psychologically, people think if you spent the weekend to get the bill out, you must be serious about getting paid. So what we recommend is you look at how often do you send out invoices. And don't just do it every month because that's the way it's always been. You should always look at automating the billing and collections process. I've talked to you already about Intuit Payment Solutions to automate the billing, the collections, and the cash application. But here is about studying and streamlining your billing process. You want to figure out how many people are involved in creating an invoice. And once you've completed the job, how many steps does it take to get out the door? And how much time does it take to get an invoice into the hands of your clients? We also recommend a tool called Funding Gates. Funding Gates is a receivable management portal. And what it does is it pops up on the screen, who do you need to call each day? It helps you automate the emails that go out, and you can get them more progressively, more direct if you need to. What I love, though, is that Art Saxby used to get an email out every Friday that says, at the end of the week, here's the number of phone calls your team made on your behalf, here's the number of emails that went to your clients, and here are the clients that you need to pay attention to because all those calls, all those emails, they still haven't paid your bill. That allows you to focus your time on where you have the biggest exposure. I love Funding Gates. I also like Insperity Payroll and Intuit Payroll because they have a sync between the payroll and the timesheets and QuickBooks. And what that allows you to do is to see the time inside QuickBooks and see the labor costs every time you run payroll, so you can use that to figure out, okay, is it time for us to do some billing? So we'll talk more about that later. That's the billing process. Let's get to payments. If you're paying your bills or if you can't pay your bills, you need to be transparent. You need to be honest. Don't go dark. Call the bank if you can't make the mortgage. Call the landlord if you can't pay the lease. Call your suppliers. Why? Because this is not an indictment on your skill as a business owner. This is affecting us all. It's a global crisis. And what you want to do is be honest with them so they can plan their cash flow accordingly. And what we're hearing is our clients, our landlords, are deferring 2-3 months worth of landlord and just adding it to the back of the lease with no penalty. The banks are doing the same thing. They're taking that mortgage payment, they're giving you a couple of months and adding it to the bank, depending on your bank. So don't go dark. Make sure you call them. And anybody that you can pay, make sure that your bookkeeper does not have a clean desk rule. They should have a pay slowly rule. We recommend Bill.com. I'm a big fan of Bill.com because it automates the whole bill payment process. You can pay bills on your phone with a scanned image attached. And it allows you to schedule your payments so you can pay them on time, but not early. So if your bookkeeper likes to have a clean desk rule, and who doesn't like an organized bookkeeper, then you can still do that and not touch it twice by scheduling it on Bill.com. But the single biggest reason why we recommend Bill.com right now is not just the cash flow management, but it's also the ability to have you see exactly the scanned image attached to the bill. That helps reduce the risk of fraud. And desperate times create desperate measures. I was an expert in systems internal controls at Ernst & Young. And so we have this whole CEO's Guide to Reducing Fraud ebook and SlideShare. And one of the biggest things you've got to be careful of is that when people have changes in financial situation, which many of our employees are having when their spouse loses their job, they're going to rationalize a need because they're desperate if you give them the opportunity. And so we just had this happen with one of our clients. The bookkeeper, their kids were home from school watching Tiger King on Netflix, yet they didn't have an unlimited data plan. So they got a $685 bill from AT&T. And so the bookkeeper, who was a trusted bookkeeper, submitted that bill along with the company's AT&T bill. And if you were just signing a check and not seeing the bills, you wouldn't have caught it. But because we were able to see the bills, we were able to say, wait, called AT&T and say, did we set up another account? No, we figured it out. And that helped you reduce the risk of fraud. And Bill.com lowered the cost of paying the bills from a $12.25 a check when you add up all the cost of getting the signature and supporting documentation and the stamps and the envelopes and the processing to $1.50, because it's got workflow to send the bill to the budget manager for approval and then to the check signer to electronically sign. So we're big fans of Bill.com. And this also is a great opportunity if you've got to get more done with fewer people. We just signed a client who had to fire their controller, and we're able to teach the administrative assistant to the business owner how to pay bills, because the controller used to pay bills. Now they can do it online very easily. So that's a lot for Bill.com. When you're paying your bills, you want to make sure you're paying the highest interest rate cost first. If you got that promotional rate of 6% interest rates on a credit card, and after 6 months it went to 19%, pay that one first. In fact, use the home equity line at 3% to pay off 19% interest, because that delta is really expensive. And that's another reason, that's the reason why you want to put 18% interest rate on your invoices to get it to the top of the pile. Cash flow is about timing. If the amount of money you get in is less than what you spend out, you're going to eat into your reserves.